questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Tejas Sonawane from Dolat Capital. Thank you, and over to you, sir.
Thank you, Norman. Good afternoon, everyone. On behalf of Dolat Capital, I would like to thank the management of India Pesticides Limited for giving us the opportunity to host their Q4FY23 earnings call. From the management team, we have with us today Mr. Anand Swarup Agarwal, Chairman, Mr. D.K. and Mr. Gupta, Chief Financial Officer.
Sorry to interrupt, sir, but the line for you seems to be breaking up in between. I would request you to please introduce the management once again. Mr. Sonawane? Hello, Mr. Sonawane?
Am I audible now?
Yes.
Okay. Sorry.
Reintroduce the management, sir.
Yeah, sorry for that. From the management team, we have with us today Mr. Anand Swarup Agarwal, Chairman, Mr. D.K. Jain, Chief Executive Financial Officer. Without further ado, I would like to hand over the call to the management for their opening remarks, post which we'll open the forum for a Q&A session. Thank you, and over to you, sir.
Okay. Thank you, Mr. Tejas. Starting off on a positive note, I would like to share a significant milestone that IPL achieved. Our newly launched herbicide technical product received TEQ certification in the European Union. We also obtained registration for one of our thiocarbon-made products in the USA. This greatly goes towards increasing our export revenue potential. Despite significant market challenges due to increased supply from China, IPL delivered a 23.2% growth in revenue in FY23. The reduce in profit margins was a result of sudden decline in raw material prices compounded with high inventory costs, which made it difficult for us to fully transfer the increased cost to the customer. This is something which we are aggressively tackling, and we will improve in the times to come. Our primary focus is toward R&D and introducing new products in the market for the Hamirpur plant. Our recently launched products are receiving positive response from the market and have contributed towards increasing our top line. For our shareholders, we are pleased to announce a dividend of rupees 0.75 per equity share on the face value of rupees 1 for FY23 as part of our renewed commitment to provide returns to our shareholders. For future, we remain committed to improving our product mix while increasing and improving our production capabilities. India Pesticides has always been working towards providing better solutions to farmers and improving the livelihood. We strongly believe in the bright future of Indian agriculture and Indian farmers. The company remains optimistic about the growth prospects of a business and believe that these initiatives will help us to continue to deliver sustainable and profitable growth. Thank you. Now I will hand over further presentation to Mr. D.K. Jain, our CEO.
Thank you, sir. Good afternoon, ladies and gentlemen. I thank you for taking out time to join this earnings call for Q4 FY23. FY23 has demonstrated the resilience of our product offerings and business model, showcasing the unwavering commitment of our team to driving growth. Despite several macroeconomic challenges across the globe, we remained consistent in delivering sustainable top line throughout the year. Our expertise in advanced process chemistry, manufacturing process efficiency, and backward integration strategies has positioned our company at the forefront of the industry. Major headwinds still remain because of the continual downward trend of the technicals offering from China, which we feel should stabilize in another 1 or 2 quarters. Furthermore, our R&D competencies have enabled us to enhance our existing products and explore new areas with significant growth potential. With steadfast focus on research, the company achieved notable success and established its own niche in the agrochemical industry. Apart from product development, we are also working towards process enhancements that lead to cost savings and efficiencies of the company. We take great pride in being a Make in India company, promoting the domestic development and production of agrochemicals. Our cutting-edge plants and accredited labs are on par with global standards, supporting our commitment to indigenous innovation. During FY23, we have launched 14 products, which include 10 formulations, 3 technicals, and 1 very important intermediate. We have successfully expanded our installed capacity by 2,500 metric ton to 24,000 metric ton per year. Our expansion projects under the subsidiary at Hamirpur plant is progressing as planned, and we will be able to commence the operation of the first plant by Q4FY24. Our unwavering commitment to delivering sustainable long-term growth remains steadfast. At the core of our strategy is a strong focus on research and development, driving continuous innovation in both our products and processes. Through our dedicated R&D efforts, we strive to develop cutting-edge solutions that not only enhance our product portfolio but also contribute to sustainable practices in the industry. We are happy to inform you that we have received NABL accreditation for our QC lab, thus strengthening our analytical capability and confidence. During this year, we have received CIB registrations for 6 technicals and almost about 100 formulation registrations, thus increasing our overall portfolio of registrations. We are also working on specialty chemicals like stabilizers, additives, biocides, and fluorocompounds, and intermediates for our wholly owned subsidiary, Shalby Specialties Limited. Our R&D team has cracked few promising molecules in this field. Our international registrations are going on with data generation and subsequent registration procedures in EU, US, UK, and South Asian countries. Recently, we received US registration for our thiocarbamate herbicide. Above all, collaboration with the Japanese multinational is in final stage. We had multiple visits by Japanese team exclusively for IPL for an important intermediate. With this, I would like to pass on to Mr. S.P. Gupta, our CFO, to walk us through our FY23 financial highlights. Mr. S.P. Gupta. Thank you, sir.
Thank you, sir. Good afternoon, ladies and gentlemen, and thank you for joining the India Pesticide Conference call to discuss Q4FY23 results. Taking you through the financial highlights for the quarter and for the year. On quarterly performance, total revenue for Q4FY23 was rupees 201 crore as compared to rupees 180 crore in Q4FY22, a growth of 10%. For the FY23, revenue of 898 crore is almost 23% higher as compared to financial year 22. We registered an EBITDA of rupees 45 crore with EBITDA margin of 22.4% in Q4 FY23. For full year, the EBITDA stands at rupees 210 crore with EBITDA margin of 23.4%. The net profit for the quarter stood at rupees 30 crore and for FY23 at rupees 143 crores. PAT margin for Q4 and FY23 is 14.9% and 15.9% respectively. In FY23, our revenue for export stood at rupees 480 crore as compared to rupees 330 crore in FY23. And domestic revenue stood at 402 crore as compared to 379 crore in FY22. Revenue from technical and formulation stood at rupees 704 crore and 178 crore respectively. The international business performed relatively well with export sales growth of 45% for the year. During FY23, we invested 68 crore in capex for expansion of Sandila plant and increased capacity by 2,500 MT during FY23, increasing our overall technical capacity to 24,000 tons. We plan to do rupees 50 crore capex at Sandila unit and rupees 60 crore capex in our wholly owned subsidiary, Salvage Specialties Limited, in FY24. We have invested in recent years in backward integration of our products and introduced new technical to reduce dependence on our existing molecule. We are confident that these investments will yield the desired result in coming year. With this, we would be happy to take your question. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello.
You are audible, sir. You may go ahead.
Sure. Thanks for the opportunity and congratulations for a good set of numbers in a very challenging environment. Sir, first of all, you have mentioned in your initial remarks as well as the press release about the carry forward inventory which was at high cost. So two things related to that. Are we done now with the high inventory which we had in this quarter? Is that completely done? And typically, what could have been the loss on this inventory, or the other way to put, if not for this high cost inventory, what will be our steady state now gross margin? That is my question number 1.
Rahul,
hello. Haji.
Yes. The high cost inventory continuous process since last 4 or 5 months. In our last call in February, we thought that what we are buying in February, it is at lowest price. But price have corrected further, say 10 to 12% in February to May. So we still have high cost inventory. We were earlier thinking that this is the lowest price, but because of increased supply from China, the prices have reduced in last 3 months. So we are still carrying the high cost inventory bought in fourth quarter of 23, financial year 23.
But we are quite hopeful that we will pass on in this quarter, maybe half of this second quarter.
Okay. Sir, in previous interaction, you had mentioned that most of the products are where we are. China is not a big competition for us. So when you talk about the price decrease in these products, are we talking about the product prices changing or the raw material prices?
The new products we have launched, they are import substitute from China. In that product, we have high cost inventory and increased competition from China. Our existing product does not have much competition from China.
Okay. And sir, so the reason for a very high inventory on the closing March, so we have inventories roughly to the tune of about 225 crores as compared to 140 crores last year. So what could be what exactly this we can relate to?
Actually, the company has started making some products which are targeted to Indian market and Kharif season. And we started our plant in July last year. So we are building up inventory in anticipation of sales in, say, first quarter and second quarter. So the inventory level has increased.
Okay. So with regards to the new products introduced in FY23, what was the contribution in FY23 and what can we expect the contribution of the same in the next FY24 and FY25?
Its contribution was around 120 crore in this FY23, and we are expecting turnover of 175 crore in financial year 24.
Sure. And FY25 it could go up to?
It will go up to more than 200 crore.
Sure. So with regards to the capex, which we have completed in last 2 years, we have almost done roughly about 140 crores of capex at our existing site. So typically, as we speak today, at the current prices, what can be the peak revenue with the existing capex completed up to 31st March 23, and in what time can we reach that peak sales?
It will be between 2.25 to 2.5. Peak revenue potential will be around 300 to 350 crores.
Okay. So, mota we will be doing around 1100 to 1200 crores current plant. The current facilities can support a turnover of about 1100 to 1200 crores.
Yes, definitely.
And sir, we had an understanding that the existing plant, say, we do not have much space for the expansion. But you have mentioned that we are doing further 50 crores of capex at the existing site. So this could be related to?
No, this is again related to the existing site only, sir. Actually, we found some space. We bought a small piece of land last year adjacent to our present plant. And with this and the little augmentation, we are able to put up 2 more blocks. So for that, we will be doing the capex at the existing site because that will be faster, and the revenue income would be faster from this site. That is why we decided to go at the existing site, and remaining we are going as scheduled at our new site.
So this existing site, say the capex of 50 crores of 2 blocks would be completed in how much time?
This year we will be completing, sir. This year maybe latest by say November, December.
Sure. And this will be for existing molecules or new molecules? Or are they specific dedicated blocks?
This will be dedicated block for new molecules. And we will be adding few infrastructure facilities there. Because we would be requiring some energy, some boiler augmentation is required, and some chilling system is required, and one evaporator system is required. So that utility structure would be requiring in addition to this. So this capital expenditure of 50 crores includes all these things.
Sure. Last 2 things, sir. One, you have mentioned about registration of thiocarbamate in USA. So have the supply started, commercial supply started? If not, in what time frame? And what can be the potential sales of this particular product?
Sir, this potential product potential is about 50 crores. So first year we would be doing maybe around 15 crores, and gradually it will be increasing year by year. And first sales we expect to do this by August.
Okay, sure. And you spoke about collaborating with a Japanese MNC for a specialized intermediate. Could you share some more details on the same in terms of what exactly we are trying to do, what kind of tie-up it is, and is it like we will have a dedicated block to manufacture for this MNC?
This is an intermediate, sir. This is an intermediate required for probably for pharma. And Japanese team is very excited. We have got some synergies with this product, and we had multiple visits from them. Recently, a delegate of 5 Japanese people, they came exclusively for IPL. They came from Tokyo and they visited us, and they went back. So they are quite confident that we should be able to crack this, and we'll have a long-term arrangement with them.
Sure. Thank you so much, sir. Thanks for the detailed insights, and wish you all the best.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press *1. The next question is from the line of Vidhi Dedhia from Axanon Fund Investment. Please go ahead.
Yeah, hello, sir. Thank you for taking my question.
Thank you.
My first question was regarding research and development expenses. So what is the percentage of revenue spent we are incurring?
We are incurring around 12 crore per annum in our R&D.
So in terms of percentage, how much is percentage of revenue?
It is around 1.25%, but certain expenses we are not including in this. Certain, say, our manpower expenses, we are not including in this.
Only R&D and chemicals we are including this.
Okay. And sir, how do we sustain such high margins in the off-patent business in looking at the current scenario?
No, because madam, actually we have long-term arrangements with our major customers, and that is based on a formula of conversion cost plus raw material cost. And we work out every 3 months based on the raw material what will be the new cost. Like that we keep on maintaining. But still we are not able to pass on the full price differential because of the increased cost of fuel and manpower, general maintenance. That is sometimes difficult, but raw material differential, mostly we are able to pass on for these long-term suppliers.
Okay. And sir, considering government's proposal to ban certain pesticides, it includes Kaptan and Zeram. So what is our plan regarding this? Because, and also, what is the percentage of these two products in our revenue share?
No, madam, first of all, these 27 pesticides which were under consideration by the government is clear. They have banned only 3 products from these, and all the remaining 24 are they have allowed to be used. Only 3 compounds they have banned. That decision has already come.
Which we are not producing at all.
And these 3 chemicals we are not producing. Our 2 products, Kaptan and Zeram, they are still intact. There is no problem on that count.
And sir, the last one, any updates on the pending cases related to mishandling of products?
They are being settled. Number of cases has declined in recent years. Earlier, I think there were 9 cases, and 2 cases has decided in company's favor.
Okay. And these were related to formulation?
Total they are related.
Okay. That's all from my side, sir. Thank you. And wish you all the best.
Thank you.
Thank you. Participants who wish to ask questions may press star and 1. The next question is from the line of Swarnashish Chatterjee from Asterisk Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. Am I audible?
Yes, you're audible, sir. You may proceed.
Okay. My first question is regarding what is the channel inventory of formulation product in domestic and international market, and when our high-cost inventory will be flushed out, maybe by Q1 or Q2, can we go back to 50% gross margin?
See, we are selling formulation only 20% of our entire sales, and channel inventory not very much in case of formulation sales, formulated product. And our high-cost inventory will be definitely be used in Q1 and Q2 of this year.
So after that, can we go back to 50% gross margin?
50% gross margin in current environment seems difficult. Currently, we are at around 46% gross margin. Currently, there is a lot of destocking and increased supply from China. So in current environment, 50% gross margin, it seems difficult.
Okay, and my last question is, where we are dominant, say Kaptan or Folpet, and say Adama is our client and he wants to switch. So what would be stopping him? Is it our backward integration which is giving us process efficiency or cost leadership, or our quality of product, or Adama will have a gestation period to register the new technical from a new supplier? What is stopping our formulation partners for switching suppliers?
Sir, first of all, Adama is a major producer of both these products. That much I want to tell you first. They are something like a big brother for us. And though they have been buying some quantities from us, but they are not the major customer for these products from us. Our major customers are different than these. And we are mostly backward integrated. Even when compared to Adama, we are more backward integrated in these products than anybody else. We are starting basically from chlorine, and even the other intermediates also we start from very basic stage, which even Adama is not doing.
Okay. Thank you. I will get back in the queue.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Sharad Ratnakumar from Ela Consulting Private Limited. Please go ahead.
Hello. Sir, thank you for the opportunity. My first question was regarding our Kandla capex that we've incurred over the last 2 years. I think the understanding was for around 140 crores of capex to get the capacity up to around 27,500 to 28,000 in terms of technicals. But if we see now, I think we've already spent around 150 and the capacity is around 24,000. So is there any cost overrun or how do we reconcile this?
Sir, there was a slight cost overrun that is of course there. And apart from this, the products which we introduced later on were of high value and low volume. That is why the volume-wise it has not increased, but value-wise it will remain intact. That is because one of the products what we have recently launched, that is a very high value product of almost $45 to $50 a kg. So the volume would not be so much of that molecule, but the revenue-wise it will give the more or less same revenue.
Okay, sir. Thank you. So the other question was regarding the overall scenario with respect to the market, the high cost inventory on our books, and I think also on every other peer's books. So what I wanted to understand is why clear that 50% plus gross margin guidance in this market seems difficult. Can we expect the Q4FY23 gross margins to continue, or and given the nature of the market, do we expect further corrections? If you can just give some guidance along those lines.
Sir, we feel that first 2 quarters, this quarter and next quarter, would be around these levels what we have reported, and later on we feel that it should work out better, because it is still very difficult for us to give a very correct guidance because of the situation presently the whole industry is going through. Everybody is having little problems in terms of the high cost inventories as well as the supplies from China. So the situation, we feel that it should stabilize maximum in 1 or 2 quarters.
Right, sir. So, and one more thing on this inventory thing. So I remember even in the last call you had mentioned that we will be building inventory for sale during the Kharif season.
Yeah.
I just wanted to understand, from an operational perspective, once we start building this inventory, won't we start placing it in the market maybe by March, April, May itself? And how has the response in the market been so far along those lines?
Yes, now though we have built up the inventories to be sold in April, May, June, and we are getting inquiries, lot of inquiries, and we are placing in the market. But still, what is happening? The buyers, they are adopting a wait and watch approach because of the continuous variation in the market prices. Everybody wants to wait and watch. That is the situation.
Right, understood. I guess we'll also wait and watch.
Facing the same difficulty.
Right. Understood, sir. Understood. Thank you so much for answering the questions, sir. I'll fall back in queue and good luck.
Thank you, sir.
Thank you. Participants, you may press star 1 if you wish to ask a question. The next question is from the line of Yogesh Tiwari from Arihant Capital Markets. Please go ahead.
Yeah, good afternoon, sir. Am I audible?
You are audible. Yes.
Yeah. So, sir, my first question is with regards to slide number 11. So, we see that our fixed asset turnover has declined over the last 2 years from 5.5 to about 3.6. So, apart from the ongoing capex which we are doing, are there any other factors as well, like any change in product mix or something like that?
Sir, our asset turnover earlier was slightly more, but with the recent investment, with the recent cost, we had estimated an asset turnover of about 2.25 to 2.5. And we feel that we should be able to get in this range, and we are working on that only.
So once our all the plants get stabilized and reach optimum utilization, we will reach asset turnover about 2.5 times, correct?
Yes.
And so what was the reason for 5.5 times about 2 years ago? What is the change like?
Plant and old land building, everything cost was at that time was less. That is why we achieved a higher asset turnover. But with the recent machinery, plant and machinery, what we are adding, the cost of machinery is high, so the overall plant cost is increasing. That is why slightly less asset turnover.
Sure, sir. So going forward, like 2.5 times, we can assume as this turnover.
Yeah.
Yes. Yeah. And so second on the this pricing, so like prices have declined. So within the segment, like if I compare herbicides with insecticides and fungicides, which would be the most affected segment with respect to price decline and demand?
All the segments are more or less in the similar stage. All the segments, the overall scenario is like this only.
So all would be falling in similar range, and demand is also like stagnant for all the products, for all the segments?
Yeah, demand, I think last year it was okay, but this year I think it will be slightly more or less in the same range.
Sure, sir. And so lastly, on the macro front, so what would be your thoughts on effect of if there's an El Nino effect on the monsoon? Can the second half also get impacted?
Alan, could you repeat your question, please?
So my question was basically regards to the El Nino effect on monsoon, the El Nino effect. So in case, in a worst case scenario, in case of an effective El Nino effect, can the second half of FY24 can be affected? The demand can be affected also?
See, if there is a substantial difference in the monsoon because of this effect, there could be some overall effect on the overall demand. There could be there, sir. But exact how much it is going to affect is very difficult to tell.
Okay.
Predictions have been made by various agencies. So some agencies say the monsoon is going to be normal, some say it is going to be deficit, some say it is going to be excessive. So we have to wait and watch.
As on today, we don't envisage any problem.
Yes.
Though there was less infestation last year, but as on today, we are quite hopeful.
Sure, sir. And sir, last question on the balance sheet. So if I look at the other financial assets at a consolidated basis, other financial assets, it has increased from about 4.9 crores to 41 crores. So what would be the reason for it?
Actually, we have lot of cash in our books. So we have invested in FDR of more than 1 year tenure. They were earning a very high interest rate. So the incremental 35 crore is new FDR of tenure of more than 1 year.
Okay, sure. That is very helpful. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star and one if you wish to ask a question. The next question is from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, good afternoon, sir. Most of my questions have been answered. Just two questions. So, sir, this intermediate that we are talking about with the Japanese company, is it only for a single molecule, or are we looking at a range of intermediates? That is one. And second, are we talking about this for patented products, or is it for a generic one?
This is an intermediate which is going to be used in a pharma product, and we are talking initially for this product, and they have shown interest in other products also. So as we get along, we would be discussing more products with them. It is not limited to this, but initially we started with this one intermediate.
Okay. And is it for a generic product or a patent?
We do not know. The final product they have not disclosed us.
Okay, got it, sir. And second, sir, you mentioned that with the capex that we have done so far, we can do around 1,200 crore revenue. So, do you think that we will be able to utilize our full capacity or optimal capacity in a couple of years? How do you look at it? And this number that we are looking at, 1,200 crore, is it at current realizations which are at a very low level, or you are looking at a more normalized numbers on realization for this 1,200 crore calculation?
Their capacity utilization, what we are doing even today is reasonably well. We are having capacity utilization of about 70 to 75%, which we feel in agrochemical industry is quite reasonable. And the increased capacity also would be utilized in the same ratio. And the revenues, what we are thinking of is the more or less with the existing price range. And any increase in the prices, that may increase the revenue, but the overall working capital, etc., will also increase in that case.
So can we utilize, can we get to that number in a couple of years? That is the thinking currently.
No, we should be able to get this 1,200 crores. We should be able to get, sir, in the FY25, 26 maximum. 25. Okay, sorry, numbers are not that really good.
No, that's okay. So, couple of years, FY24 and FY25, 2 years we should be able to. Okay, yeah, thank you. That's done.
Thank you. Participants who wish to ask questions may please press star and one on their touchtone phones at this time. The next question is from the line of Vidhi Dedia from Axanon Fund Investment. Please go ahead.
Yeah, thank you for taking my question once again. So basically, I wanted to know what is the percentage revenue coming from the technical Kaptan, Polpet, Carbamate and Ziram?
Individual product-wise revenue, it will be very difficult to give, but our fungicide technical, they are contributing more than our herbicide technical.
Sir, in case you can give me a rough percentage?
Yeah, but technical sales is around 80%, or say our total fungicide sale will be around 37% of our entire turnover.
Okay.
Fungicide technical.
I'm just repeating myself. Basically, this is with regards to the government's proposal to ban certain pesticides. Is there any uncertainty with respect to coming to ban of Kaptan or Ziram in future?
No, I don't think there is any uncertainty or certainty about that, because recently they have done a thorough evaluation, and after that they have given the decision. So we feel that it should be valid for at least coming 10 years. There should not be any problem at all.
Okay, and we'll have the same share of percentage kind of utilization and selling and everything.
Yeah, certainly. It will slowly increase a bit, but it will remain no problem on that count at all.
Okay, thank you so much.
Thank you. Ladies and gentlemen, you may press star and one if you wish to ask a question. The next question is from the line of Rohit Nagraj from Centrum Broking Limited. Please go ahead.
Thanks for the opportunity and congrats on good FY23. So first question is, we have indicated that we will be expanding into stabilizer, additive products, fluoro specialties. So in terms of marketing products, obviously the users will be different. So what is the strategy that we are likely to adopt for that?
Sorry to interrupt, but the line for you is breaking up in between.
Yeah, could you please repeat?
Hello?
Hello?
Yeah, is it better?
Yes, this is much better, sir. Please go ahead.
Yeah. So my first question is, we are planning to expand into stabilizers, additive products, fluoro specialties. Now, these segments will be catering to different set of user industries. So what is the strategy that we are planning to make inroads through, say, marketing or business development into these new segments? And which would be these new segments where we're concentrating for these products? Thank you.
Sir, we would be normally selling these products for export only. Mostly these products are being exported. And we already are having connections with few of the companies who are interested in these products. And fluorochemical, for example, in agrochemical industry itself, there are a lot of fluoro intermediates which are being used nowadays. So we are aiming few of them, and we would be catering to agrochemical industry in this regard.
Right. So just a light question to that. In terms of R&D or reaction synthesis capabilities, so how are we placed for entering into these new areas from an R&D perspective?
No, we are generating that capability, especially for chlorination arrangement. It requires some special arrangement. So that we are arranging to develop as a separate small branch in our R&D. And similarly, there are some vapor phase reactions. So there also we are making arrangements for some vapor phase reactions. And recently we started even the nitration and hydrogenation arrangements also. So like that we are expanding our scope of operations. And we are recruiting specialized people with these specific experiences so that we can take it smoothly.
Right. And just one last question. In terms of the revenue potential, we indicated about 1,200 crores of revenues by FY25. Any understanding on the EBITDA margins that time, given that the inventory situation will normalize and we will also have better operational efficiencies on the newer CapExes that we have done?
Sir, it is too early to tell because it will be we don't know how things are going to unfold. But we can say that at least we will be able to maintain the present margins.
Sure.
That much we can tell. Yeah.
Got it, sir. Thank you so much and best of luck, sir.
Thank you, sir.
Thank you. The next question is from the line of Yogansh Jeswani from Mittal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity. And sorry if my question is a repeat. I joined a little late. Sir, there is a mention about a product that we have started in USA, thiocarbamate. So if you could tell us a little bit more about it. And overall, how much is the percentage of our exports to US in the overall sales as of now? And how much it might change with this new product addition?
Sir, with this new addition, it is a thiocarbamate herbicide mostly used on rice. And it has got good potential in US as well as in Canada. And the registration has just now we received it through one of our customer collaborators with whom we have been working for the last 4 years. And we feel that it should give us in the first year about 15 crores. And gradually it may go up to almost 50 crores.
because I think Europe is a bigger market for the US. Is this the first time you are entering?
Sorry to interrupt, but there was some audio loss from your line.
We have bigger market in Europe. Presently, we are dealing more in Europe. Slowly, we are trying to expand our operations even in US and Latin American countries.
Okay. No, so, Jayanta, what I was trying to ask is, currently, how much of our business is coming from USA? Even a ballpark figure would be of help here.
It will be around 3% of our turnover. Currently, it will be in the range of, say, 30 crores of export to US.
Okay. So with this product, we have entered US in a much better way, and probably this will help us gain more market share and launch new products in USA.
Yeah. Apart from this product, we are also negotiating for other products, and they have shown interest in those also.
Okay, understood, sir. And sir, one question on the inventory side. You did mention about that inventory build-up is for Kharif. Could you also share how much of that inventory is for this particular product? Because I think there was one product to be launched for Kharif, and how has been the pickup now that we are already in June? So how has been the pickup now?
The inventory amount-wise, the product inventory was around 45 crore in March. And demand is good demand, but everybody is in batch and batch mode, so it is buying in a small quantity. So we are quite hopeful by end of this Q1, majority of the inventory will be liquidated for that product.
Understood, sir. That's really helpful, and all the best to you guys. I will join back.
Thank you. Thank you. Ladies and gentlemen, that was our last question for today. I now hand the conference over to the management for closing comments. Over to you, sir.
Thank you very much, ladies and gentlemen. If you have any more questions, please do call us. We will be happy to answer your questions. Thank you very much for sparing your valuable time to attend this investment call.
Thank you.
Thank you.
On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you. Thank you.